events that, maybe rattled the market a little bit. So our stock was, underperforming the market compared to our peer group for, really about, 3 or 4 quarters, which was a little bit distressing. And so I decided to put the share purchase program back in place. We had it in place before, but we hadn't renewed it. But I decided to renew it, and we actually threw some bids into the market to buy some stock, and then all of a sudden the stock took off on us, and now the stock is up 30% or something in the last 4 weeks or whatever it is. I have to do the math exactly, but it's performed quite well over the last few weeks, and so we haven't bought any back, but it's there. If we see any weakness in the stock, we'll definitely be in the market buying back shares, and are happy to do that.
Good evening and welcome to today's financial news update, where we focus on the latest developments in the world of precious metals and mining. The headline of the day is a major shift in predictions for the gold and silver markets in Q4 2024, presented by Keith Neumeyer, CEO of First Majestic Silver, in a recent YouTube video. Let's break down what this means for investors and what we can expect moving forward. First, Neumeyer begins by discussing the recent underperformance of First Majestic Silver's stock compared to its peers over the past few quarters. To address this, the company reinstated its share repurchase program, a move aimed at stabilizing and boosting investor confidence. In a surprising turn of events, as soon as they started buying back shares, the stock surged by 30% over the past 4 weeks. This move is seen as a positive sign for investors, showing the company's commitment to maintaining value and its readiness to act if the stock dips again. We continue our news.
No, pardon me, 970 million US dollars in shares of First Majestic. Gatos shareholders end up owning 38% of the combined company, which is a great thing for both shareholder groups. And it combines 3 world-class district scale mining projects in Mexico. The Santa Elena, which produces, a little around 10 million thereabouts ounces of silver equivalent, of which about 70% of that is gold and about 30% of that is silver. And then San Dimas, which is another, long-standing world-class mine in Mexico as well, 50% gold, 50% silver, also producing around 10 million silver equivalent ounces. And then with Gatos, around the same number. It's actually a little bit bigger, but with the joint venture, we're getting 70% of that production, which is just shy of about 10 million ounces as well. And about 70% of that is silver. The rest is in the form of lead and zinc. So we'll end up having 3 world-class projects under our umbrella, all of which are producing around 10 million-ish silver equivalent ounces, taking our production up from around today, about 21 million annualized silver equivalent ounces, to about 31 or maybe 32 million silver equivalent ounces in 2025 upon closing. So it's pretty exciting for both shareholder groups. Gatos has obviously performed quite well over the last 12 months, and First Majestic has underperformed slightly, as which we can talk about if you wish. But I think it's a great transaction for both companies.
Yeah, and Keith, obviously there were a few big components here.
Okay, we never stop, and obviously we know the silver space extremely well. We know Mexico better than probably anyone. We've been in Mexico for 21 years now, when I put the company together, and we're a pretty big player in Mexico, so we know the Mexican landscape extremely well. And this asset we've had our eyes on for some time. When it became available earlier this year, it went through a process. The banks got involved, of course, you can imagine. And they had their advisors on their side, and we had our advisors on our side, and there was a whole group of other companies participating. It was a very competitive process that lasted, several months, and came to the end when it was news released, and we ended up being on top of the bidding process, which is good to see. But it was quite competitive, and it was an open bidding system, and nevertheless, you talked about exploration. Now we look at Santa Elena very much the same as San Dimas, or pardon me, as Los Gatos, because Los Gatos is 103,000 hectares in size. It's a district scale, huge property, very, very underexplored. And then you look at Santa Elena at 102,000 hectares in size, which when we bought it back in 2015, it was producing 3 million ounces. Today it's producing almost 10. And that was all through exploration success. And still a small portion of that property has been explored. So we have 9 rigs active right now at Santa Elena, and there'll be a similar number. I think that there actually is currently a similar number of rigs at Los Gatos. So, they're taking their exploration projects very seriously, as we are within First Majestic. And both of those mines are expandable. And I think the life of mines over the next 5 to 10 years will be expanded substantially as a result of exploration success.
And
So right now, First Majestic had 43% silver. The rest is in the form of gold. On a combined entity will be 51% silver, and the 49% is broken up between gold and lead and zinc. The lead and zinc is, maybe 20%. The other, whatever the number is, it's 29 or whatever works out to is in the form of gold. And on a cash cost basis or an all-in sustaining cost basis, we do ramp down a little bit. We have seen elevated costs over the last 12 months at La Encantada and San Dimas, and this is well documented. We put a lot of news out on this because we have seen these elevations, and the water situation that we had at La Encantada drove costs up there, which has now been resolved. So you'll see in Q4 the cost of La Encantada coming down. Some of the labor issues we've had at San Dimas have also elevated costs there as well. That normally produces ounces in the 14 to 15 level. It's been higher in the 18 level over the last 12 months. And then with Gatos coming in, it's in the 16 level. So, all in, a combined entity. Now, of course, we have not put out our 2025 guidance yet, and both companies, Los Gatos and First Majestic, are still in our budgeting process for 2025. But we're expecting, all-in sustaining costs in the 16 to 18 range next year.
With an important update on silver premiums, which have reached their highest levels in 9 months. Section 2. Rise in silver premiums and market impact. In other critical news, silver bar premiums have surged to their highest levels in 9 months. After a period of lower premiums following the 2023 banking failures, demand for silver has seen a dramatic increase. The rise in premiums from 10 cents to 50 cents on generic silver bars is largely due to industrial demand and a reduction in retail selling. This is a key factor for those monitoring the precious metals market, as increased premiums often indicate future price movements, particularly when paired with geopolitical factors like upcoming elections, potential Federal Reserve rate cuts, and the BRICS summit, all factors likely to fuel further market volatility. We continue our news by shifting our focus to First Majestic Silver's recent acquisition and their strategic moves for the future.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
With our shareholders, of course, but Los Gatos shareholders, we've met with many of them over the last month, or the last several weeks since the announcement came out, and we've got a number of meetings coming up over the next month as well. We've got quite a rigorous travel schedule over the next 2 months, so we'll be meeting more of them and talking to more of them. But I think we've not really heard any resistance. It looks like a win-win for both parties. I think maybe some investors are saying First Majestic's paying too much, and Los Gatos is selling for too little. But I guess that's a common thing that you're going to hear from both sides. But the big institutional shareholders, the people that really understand what the combined entity looks like in the future of First Majestic, I know for a fact, because I've spoken to dozens and dozens of people, that it's being looked at as a very favorable transaction. And But we do have to go through shareholder votes. That's, a transaction of this size. You need both shareholders to vote, and we don't know that date yet because there's a couple of moving parts related to regulatory and legal situations with the SEC and so on. So we'll know in the next 30 to 45 days, we expect, when the shareholder vote can take place, but we're hoping it's going to be late November or possibly early December. And then, assuming that all takes place, we do need the Mexican antitrust also to. That's a common thing every time a transaction occurs, even in Canada, for example, or the United States for that matter. The government steps in and make sure there's not a monopoly situation and those types of issues. So so it does go through that regulatory process within the country, Mexico, and it should be pretty easy. We've gone through it many times. It takes 60 to 90 days. With the change in government, which takes place on October 1st, it potentially could cause a delay of some weeks. I'm not sure about that, but there is always that potential. But we do expect closing will occur in January. At least that's our current target.
Okay, well, we will keep an eye out for that. And something you mentioned a little bit earlier, just worth going over again, was the La Encantada water issue, which is now resolved. And you were saying we're looking at fourth quarter when we'll see that impacted into the cost structure.
Mm-hmm. Yeah, it was pretty crazy because that mine is it's our smallest mine. It produces around 3 million ounces of 100% silver and doré bars, which is great. It's been a great cash flow producer for us for almost a decade. Actually, longer than a decade. We bought it in 2006, and it's been a great cash flow provider for the business, and has helped finance us, and other endeavors, over that period of time. So, when this well collapsed in June of 2023, it was completely unexpected. And this mine has 3 wells, each producing approximately 30% of the water each. And, one goes, and all of a sudden you lose 30% of your water, and you need water in the process. So all of a sudden, you can't turn the mills, you can't do underground development, you can't do exploration. But we could have, I suppose, laid off the workforce, but we didn't know when we were going to discover a new water well, and we thought it would be quite easy to do. Well, we didn't discover a new water well until April of 2024 of sufficient capacity, and it took us a few months after that to build the piping system and get it to the mill. So starting in June, July, we started filling up all the tanks again, which took some time. So we went from about 2,000 tons a day, which was losing money. So costs went up to about $30 an ounce, which is pretty shocking, and it lasted there for a couple of quarters. And now we're back up to over 3,000 tons a day, which is normal course for that operation. All the tanks are filled back up with water. We're all back, 100%. The grades are actually looking quite interesting. So, we're going to, I think, we should see, just based on the last few weeks, a pretty darn good fourth quarter.
Shifting focus to First Majestic Silver's business strategies, Neumeyer elaborated on the company's $970 million acquisition of Gatos Silver, which consolidates 3 top-tier mining projects in Mexico: Santa Elena, San Dimas, and Gatos. Each of these mines is expected to produce around 10 million silver-equivalent ounces annually, which will boost First Majestic's production from 21 million ounces today to around 31 to 32 million ounces by 2025. This acquisition strengthens First Majestic's position as a leader in the silver production market, with the combined company now producing 51% silver and the remainder made up of gold, lead, and zinc. In terms of cost management, Neumeyer noted some recent challenges, including water shortages and labor issues, which had temporarily driven up the all-in sustaining costs of production. However, these issues are now being resolved, and production costs are expected to stabilize between $16 and $18 per ounce by next year. This stabilization will allow First Majestic to maintain its competitiveness in the market and position itself for future growth. In addition, the company is exploring expansion opportunities through its active drilling programs, aiming to extend the life of its mines and enhance future production capabilities. Notably, the company's unique mine-to-mint strategy allows them to refine and sell silver directly to consumers, bypassing traditional markets and providing greater control over product pricing. With these moves, we conclude our news. on First Majestic Silver's significant strides in the gold and silver markets, signaling an exciting future for investors and shareholders alike. Stay tuned for more updates as we continue to follow these developments closely. Thanks for watching, and don't forget to like, subscribe, and turn on notifications for more insights into the world of finance and precious metals.